We're here in Austin, Texas at Consensus 2022. Obviously, across the board, the market is significantly down at this point, but we've seen that price movement doesn't really affect builders and users.
So in 2018, when crypto last took a dive into the winter and bear market, we saw institutional interest drop off a cliff, and it didn't come back for several months, if not years. What's different now is we've seen no diminishment in that interest. That institutional interest continues to build every week, even with prices going lower.
If you look at the long-term trajectory of the market, there is obviously enormous volatility, but it's clear that it's going up and to the right. This market reminds me a lot of the internet in 1999, when there were thousands of internet companies all vying to become the Google, the Amazon, the PayPal. And this market will shake out in a very similar fashion. Of the many thousands of protocols that are out there and projects being developed, there will be a couple of dozen that rise to prominence, and most will fail.
We've been through these cycles before many times in the past now, and I think the overall sentiment in the long run is very positive.
I think we're all getting used to this. I thought Coinbase's ad of a couple of weeks ago was pretty powerful. We'll see higher lows and higher highs, if we can think about it that way. Clearly, there's a correlation between the traditional asset markets and the risk assets that's going on and what's happening in crypto. But I can tell you that the clients that we are meeting with regularly have not wavered in their enthusiasm for the space. I think a longer term view is becoming more in vogue. I think the merge for Ethereum could be a catalyst, lifting the markets, and also when we get a little bit more clarity around where the equity markets are heading, whether or not we're heading into a recession. You know, crypto hasn't seen a recession. And so I think there's still a few known unknowns out there that will keep us range bound for a while.
I don't think we're entering a full crypto winter, meaning multi-year winter. I think obviously asset prices are depressed. There's a huge risk-off movement across all asset classes right now, which crypto is particularly vulnerable to. And always has been. So longer term, it may be this great inflation hedge, and we think it will be. But in the short term, it follows tech stocks.
It's about the principles, about the technology, and having been in the space for a little while, it's like 30,000 is actually really high. I mean, if you zoom out, the dips have been way worse, and the increases have been way better over time. So I think Bitcoin is starting to be less volatile, even though it feels more volatile.
I think the bear market is for the builders. It's really after all the friends and the hype, it's only the builders and true believers are sitting here, staying here, and they can focus on building. And this is also when where we start to do a lot of reflection and see what works and what doesn't work. And we're gonna just get ready for the next bull market coming in the future.